Hey, what's up, guys? This is Cody the Coin Raptor coming at you with another Bitcoin video. And in this video, I'm going to be talking about ARK's Bitcoin monthly report. Now, I didn't do a video for the previous monthly report because I didn't feel like there was anything in there that was particularly interesting or important for you guys to know. So this one, however, is very different. And the reason why this one is different is because we've seen a large panic in the Bitcoin price over the past week. And I want to go ahead and talk about my feelings here on the Bitcoin monthly report. I also want to go through the most important parts, and I want to talk about my opinion on these parts. So, as before, if you have not subscribed to the channel, I definitely would greatly appreciate it. I'd like to get to 500 subscribers, hopefully by the end of the year. That's my goal. And go ahead and follow me on Threads and also on X. So this is for July, but there's going to be a lot of mentions here towards what happened in on the 5th of August. So they start off here with the market summary, and they say, during July, the price went up to 64,000, but by that August 5th date that we talked about, that huge liquidation date, it corrected 23% to the local low at about 49,500. Now, what's key about this is that it went below its 200-day moving averages. And if you watch this channel a lot, you'll know that I'm always following that 200-day moving average because of how incredibly important it is. So it went all the way down below that level, below 61,000, and the short-term holder cost basis at 65,000. Now, these are going to be key supports according to ARK. We'll cover that here in a minute. Also, they mentioned that the Fear and Greed Index hit extreme fear below 25 for the first time since November 2022. So what that means is that this panic that happened on that day, August 5th, was worse than any other panic we've had up to this point, going all the way back to the collapse of November of 2022. This is when Bitcoin basically went all the way down to like 17 or 18K. This is the bear market bottom. So this collapse was worse than any other time up to that point. So this is really quite notable. They also talk about the SOPR. We'll cover that in a little bit here. And then they talk about the long-term holder supply, another metric that I've been following a lot, and we'll cover that in the upcoming slide here. And they also talk about the yen reversal and recession signals. So the idea here is that there's a lot of mixed economic data coming out. And ARK is essentially saying that there's going to be a recession, or we're in a recession already, and potentially speaking, that could impact Bitcoin. So we're going to go ahead and go down to the on-chain metrics. Now, all the on-chain metrics right now look pretty good. They've actually upgraded a couple of them to bullish. Miners revenue, that's good, given the fact that we've had the halving this year, so that's always good to see. Miners are definitely looking more bullish. Transaction volume also went up as well, so they've upgraded both of these two things to bullish. Everything else is neutral apart from the locked supply. Now, going to the derivatives market, the only thing here that's been downgraded is the realized market returns down to neutral, and everything else is bullish or neutral. All right, so let's go ahead and get right into it. So they talk here about Bitcoin's huge fall all the way down to 49,500. The fact that that's below the on-chain mean and the short-term realized price and the 200-day moving average is something that is very notable. So the on-chain mean right now is sitting at that red line right here. The 200-day moving average is that purple, and then the green is the short-term holder realized price. So they're saying here that it basically lost that short-term holder cost basis at 65,700. Now, as a reminder, short-term holders usually defined less than holders that have held Bitcoin for less than 155 days, and the 200-day moving average here at 61,000. So they say here that the most important price supports are at 52,000 and 46,000. All right. So they've actually kind of outlined this here, right here. Now, Bitcoin has since kind of self-corrected, at least as recording this, up to about 60,000 or so. But they're saying that the next levels of support that you can look at here are going to be at 52 and 60 and 46,000. So according to ARK, because they've basically lost the short-term realized price and the 200-day moving average, this is bearish in their view. And they're going to talk about a trend reversal for the Bitcoin price. So it seems like to me they've gotten bearish, at least in the short term. They also talk about the fact that they have the SOPR, the spent output profit ratio. The SOPR basically measures profitability of sellers, and this dipped below 1, which is the break-even line, and it went down to 0.95. So essentially, you've had sellers who are selling at a loss for the first time since, according to their charts here, probably about late 2023, maybe early 2024. And so this is being viewed as, again, another reversal of Bitcoin's bullish trend. They also talk about Mt. Gox and how the Mt. Gox distributions have affected the Bitcoin price. Now, as a reminder, Mt. Gox and the redistribution has been ongoing throughout the whole month of July. Back when Mt. Gox was hacked, many of these Bitcoin were stolen, and now they've been recovered, and now they're being redistributed to people who had their Bitcoin stolen. And so now they're saying that the Mt. Gox balance that they've looked at has dropped 52%. So they're saying that roughly there's 65,000 more Bitcoin that need to be distributed. Now, according to ARK, they're saying that they believe that long-term investors experience in digital assets will hold the Bitcoin they receive, which is also a similar position that I've had as well, which is kind of a little puzzling why they have this as a bearish point, but I guess they're looking at the overall impact, and it seems like that a majority of these folks that have gotten their Bitcoin back have probably sold it, because we've seen a large amount of selling in the Bitcoin price over the month of July. But regardless, right now, ARK is saying that they believe that these investors are going to hold. Next, we talk about the Fear and Greed Index, and this is something I cover all the time. So Fear and Greed Index, very important metric to watch this, because the Fear and Greed Index hit extreme fear, which is defined as below 25 for the first time since November 2022. Now, again, what this means is that the amount of fear on the market is comparable, or at least was comparable on August 5th, to a bear market bottom. That's how bad it was, okay? Because again, you go all the way back to that November of 2022, the bear market bottom. And so what you're starting to see here is that people wanted to get out. They wanted to sell no matter what the price was. And so that's how we saw Bitcoin sell all the way down to about 49,500. Then they talk about the long-term holder supply. Now, this is something I've been looking at that has been actually a very bullish indicator for Bitcoin. The long-term holders are wallets who have held Bitcoin for more than 155 days, and they've been increasing. They haven't been decreasing. They've been increasing. They've been buying the dip since Bitcoin has basically shot up. And now, as we're seeing the Bitcoin price come down, they're starting to accumulate again. And I think this is a very good point. This is a very good point here. And I think that this is a bullish point for Bitcoin in the short term. And they're saying here that it increased 1.5% quarter over quarter. All right. Now they're going to talk about the macro turmoil, speaking to the what they call the carry trade. And the carry trade is essentially when you have investors who are buying, who basically have Japanese yen, and then they're taking out loans in Japanese yen at low interest rates, and then they're basically converting it over to either the dollar or another currency, and then they're going and buying securities or treasuries, or putting in high yield savings accounts. Basically, they're taking advantage of the fact that Japan has very low interest rates right now, and Japan has actually been raising its interest rates, and so as a result, that kind of caught a lot of these people off guard and surprised, and that caused a large decrease in at least traditional assets. And I guess this has impacted Bitcoin as well, and so that's one of the reasons why we saw that massive market panic on the 5th of August. Now, what they're saying here is that this reversal of the yen relative to the dollar, the value of the yen relative to the dollar, means that there's going to be more carry-on effects. You're going to probably wind up seeing more selling as this goes lower and lower and lower. So this is bearish in ARK's view, because I think this is probably going to cause some additional selling. Now, they also talk about the SOM rule, and this is something that's been trending around a lot, especially in social media. The SOM rule, according to them, is a rule that is triggered after a 3-month moving average of the U.S. unemployment rate hits 50 basis points above the lowest level in the last 12 months. And They're saying that this is a rule that's triggered before every recession, or rather, on average, it's actually it's triggered when the economy is already in a recession. So they're saying here that the economy has been in a recession, and it's reinforced by the trigger of the SOM rule. And their view, this is very bearish. So overall, if you remember all these reports that I've gone through, ARK has been very bearish on the macroeconomic picture, at least for the last couple of years, since they've done the monthly reports. So this is not really anything new. They also talk about the Fed funds rate and the expected Fed funds rate, and they're saying that the forecasted rate cuts are going to be increased from 4 to 6 cuts, and there's a potential that we could wind up seeing a large cut by the end of the year, a large series of cuts by the end of the year. And again, they say this is neutral, but personally, I've been talking about this for some time, and Bitcoin tends to be inversely correlated with the Fed funds rate. So as the Fed funds rate goes down, Bitcoin tends to benefit. So if the Fed is cutting rates, I think that's actually very bullish for Bitcoin. All right, so again, we're going to go ahead and I'm going to just give my quick summary and wrap up of the ARK monthly Bitcoin report here. So ARK is honestly kind of switched to being very bearish right now, at least in the short term, because they've talked about the fact that Bitcoin's gone below its short-term holder cost basis and the 200-day moving average, and then there's all these economic indicators that are saying that the recession is coming. So honestly, from my perspective, it looks like ARK is very bearish on Bitcoin right now. Now, this could change. This could always change, but for now, ARK seems to be in the camp that Bitcoin is in deep value, according to them, and there is significant global macro turmoil on the horizon. All right, so let me know what you guys think below. Leave a comment, and I'll catch you guys on the next video.